Welcome to the world of financial excitement, where numbers dance and charts tell stories, the stock market. In this fast-paced arena, fortunes are made and lost in the blink of an eye. Today we embark on a journey deep into the heart of the stock market, deciphering its complexities and unraveling the secrets that drive it. Stock market analysis is not just about numbers, it's about understanding the pulse of the global economy. So buckle up as we explore the art and science of decoding market trends, making informed decisions, and potentially redefining your financial future. Understanding market trends. In the ever-fluctuating realm of stocks, understanding market trends is crucial. Trends are not just lines on a chart, they represent the collective psychology of investors. By analyzing historical data, investors gain valuable insights into the market's direction. Identifying uptrends, downtrends, and sideways movements provides a roadmap for informed decision-making. A rising trend may indicate investor confidence, while a descending trend might signal caution. Sideways movements, on the other hand, suggest a period of consolidation and uncertainty, offering both challenges and opportunities. By comprehending these trends, investors can anticipate market movements and strategize their investments wisely. Fundamental analysis, unveiling company secrets. Behind every stock lies a story, an intricate tale of financial health, management prowess, and market positioning. Fundamental analysis delves deep into a company's financial statements, evaluating its revenue, earnings, liabilities, and assets. By scrutinizing key ratios like price to earnings, PE, and debt to equity, DE, investors gauge a company's stability and growth potential. Additionally, understanding a company's management, industry position, and competitive advantage provides valuable context. Fundamental analysis is not merely number crunching. It's about uncovering hidden gems and identifying stocks with strong fundamentals that can weather market storms and stand the test of time. Technical analysis. Decoding market psychology. If fundamental analysis provides the foundation, technical analysis offers the blueprint. It's the art of interpreting price charts and volume patterns to predict future market movements. Technical analysts believe that historical price movements repeat, reflecting the market's collective psychology. Chart patterns like head and shoulders, double tops, and flags provide valuable insights into potential reversals or continuations. Indicators such as moving averages, relative strength index, RSI, and MACD, moving average convergence divergence, serve as tools to identify overbought or oversold conditions. By understanding these patterns and indicators, investors can make strategic decisions, maximizing their gains and minimizing risks. Market sentiment. The X factor. Beyond numbers and charts, market sentiment plays a pivotal role in shaping stock prices. Human emotions, news events, and geopolitical factors create ripples in the market. Positive news can trigger buying frenzies, propelling stocks to new heights, while negative news can cause panic selling, leading to sharp declines. Sentiment analysis involves gauging public perception, media coverage, and social media trends to assess market sentiment accurately. By staying attuned to the market's emotional pulse, investors can anticipate market movements, adapting their strategies to align with prevailing sentiments and positioning themselves advantageously in the market landscape. Risk management, safeguarding your investments. In the world of stocks, risks are inevitable. However, prudent investors employ risk management strategies to protect their investments. Diversification, the practice of spreading investments across different assets and sectors, reduces the impact of a downturn on the overall portfolio. Setting stop-loss orders, predetermined price levels at which stocks are automatically sold, limits potential losses. Additionally, understanding the concept of risk-reward ratio helps investors assess potential gains against possible losses, guiding them in making calculated decisions. By embracing these risk management techniques, Investors safeguard their capital, ensuring financial stability and resilience in the face of market volatility. Market volatility. Navigating turbulent waters. Market volatility, akin to a tempestuous sea, tests investors' mettle. Fluctuating prices and unpredictable movements characterize volatile markets, posing challenges for investors. However, volatility also presents opportunities. In periods of heightened volatility, stock prices can experience significant swings, creating favorable entry points for savvy investors. During such times, staying calm, patient, and well-informed is paramount. Astute investors view volatility as a chance to buy undervalued stocks or short sell overvalued ones, capitalizing on price differentials. By understanding the dynamics of market volatility, investors can navigate these turbulent waters with confidence, turning challenges into profitable ventures. Trading strategies. Navigating the market. Waves. Trading strategies are the lifeblood of successful investors. From day trading to value investing, there's a strategy for every risk tolerance and financial goal. Day traders aim to profit from short-term price movements, while value investors seek undervalued stocks with long-term potential. Swing trading, momentum trading, and options trading offer diverse approaches, each with its unique set of rules and considerations. Choosing the right trading strategy is essential to align your investment approach with your financial objectives and risk appetite. Market analysis tools, harnessing the power of technology. In today's digital age, market analysis tools have become indispensable for investors. Real-time data feeds, charting software, and algorithmic trading platforms provide a technological edge. Additionally, robo-advisors and artificial intelligence-based tools offer automated portfolio management and decision-making assistance. Whether you're a seasoned investor